Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in and take a look, see what's going on today. If you want to follow me, it's @_finance. And if you want to join our community, finding-value.com, where I dive deeper into these topics and subjects, looking for potential investment opportunities and sharing those opportunities with everyone in the community. You can see the special coupon code. It's in the corner. If you'd like to join, it's 50% off the first month only in a monthly membership, and a larger discount on the yearly membership if you'd like to switch over from a monthly to a yearly. That disc code does still work. So Ryan says, point this out next time someone tells you about all the debt out there. There is a lot of debt, but there's more equity, and you need to look at both. And this, in particular, is U.S. household leverage, liabilities to net wealth. It is the lowest in 50 years. Look at the decline here in leverage for U.S. household leverage, almost like a double bottom, it looks like. The bottom here, and then another maybe potential bottom where the red line is. Um, you can see the leverage was increasing all the way from the 60s to 2010. And maybe this has something to do with the stock market. Maybe it has something to do with a decline in money printing since 2008. You can clearly see that 2008-9, there is a peak, and then it rolled over in 2010, 2009. So maybe they're trying to deleverage the entire world here with a bunch of money printing. But it is working. As asset prices go up, stock prices go up. And if you have debt, if people have debt in the system, it gets deleveraged. Some people, if you were to ask them before the Weimar hyperinflation, you ask them, what would you have done differently? They would have gone a lot more into debt, is what a lot of people would say. Now, does that mean that it's a low risk thing to do? No, it does not mean that piling on a bunch of debt is a low risk way to play the hyperinflation or high inflation. But having some debt at a fixed rate, at a very low um, interest rate, is probably a good idea. Something like a mortgage with a very low fixed rate. Probably a pretty good idea to refinance in 2021, like a lot of people did. But U.S. household leverage, it's dropping like a rock. Alfonso says gold leads, then comes copper. Energy's next. That's how these cycles play out. Copper looks just like gold did before it exploded last year. Check it out below. Gold with that fractal pattern, copper with another fractal, and it is breaking to the upside for copper. We're probably going to get a big run in copper. Gold leads because it works under a different market condition. Gold is a safe haven asset. So when the yield curve uninverts, gold goes up. The rest follows later after they print money and the money starts making its way through the system. Think of it as a recovery phase. During the recession, gold generally does very well. It kind of front runs the money printing. Once the money's printed and it starts working its way through the system, copper and oil get moving. So that's the reason, or at least my interpretation of the reason why these outperform differently during different parts of the cycle. But yes, copper's about to hit it here. So is silver. So is platinum. So is palladium. So is fertilizers. So is oil. So is everything. There's a lot of things that are going to go up. You know what that's called? Money printing, debasement of currency. That's what that's called. And I'm a little bit afraid here. I'll admit it. I'm a little bit afraid. Why am I a little bit afraid? These are not small patterns, guys. These are big patterns. This here went sideways for a good, 25 years. I mean, this is 2000, or sorry, I should say this is probably good 20 years, 15, 20 years where this thing peaked and went sideways. We have higher lows coming up into this, and this thing's going to be a big move. We're not going to break and go up, 100%. We're going to go multiple hundreds of percents to the upside. Gold, it's running. Copper just started. Silver, it hasn't started its big run yet, but it will soon. And what gets me a little bit scared is that these are the base materials that go into everything. Copper, silver, gold, maybe not gold, oil specifically is in everything. When these things start to run, you're going to see it in the consumer price index. Things are going to look real nasty. They are going to look real nasty. And I'm a little bit afraid just because I don't know how much these things are going to run and I don't know what the impact is. And at the same time, we're throwing on all these tariffs. It's like tariffs all over the place. So the consumer is going to get hit from all angles here, from a tax perspective. The interest payments on the debt with the interest going up, so interest rates, that's going to look pretty nasty too. So I don't know what's going to stop this thing. Once it gets moving and once money starts to rotate, I don't think it's going back. It's going to be hard to unwind this thing. And that's what scares me. Scares me a little bit because, one, not a lot of people know this is coming outside of you guys watching stuff like this and following the markets. But when this comes, guys, people are going to get scared, myself included. I'm getting a little bit anxious, not like losing sleep at night, anxious, but anxious that when I see these charts, I'm going, my God, what exactly is coming? Is the market pricing in a currency failure? Is it pricing in, a mass revaluation of commodities where we get many hundreds of percents higher in everything? What does that mean? What does that mean for people who are just regular average workers? Is this going to be the haves and have-nots? I don't know. Is our currency absolutely going to get shredded here? It could be. Yeah, that's kind of what this is saying. And everyone in the market is positioning for such moves. You're not gonna read this in the news, guys. The news is going to come later. This is kind of the forefront of what's happening, and it's people positioning in the market for that outcome. You don't need news. Look, if you know how to read charts, you don't need news anymore. News is all just delayed crap that people see when prices go up. I start to worry before it actually occurs because I can see it in the charts. That's how we get our good entry points. That's how we know where to be. It's based off of smart money positioning. Momentum Structural Analysis says gold and silver miners are the best performing asset category year to date, up 50 to 55%. But you get a bad day like today and all the trolls reemerge. Ha ha, idiots sure hope you didn't buy any mining stocks. I need to learn from the trolls who clearly have the superior investment strategy of simply buying assets that never have down days. Why didn't I think of that? Yeah, what's up with that? When stocks go down, I'll say this: it's not just the trolls; it's human nature. It's the herd. When things go up, everybody gets excited. Oh my God, did you see that? Look at that. Oh yeah, I made an investment in there. And then when it goes down, they come out and then they start to rip on people. Oh, that's such a poor investment. Oh, it's so bad. It's down 25% or even 50% the last 6 months. Guys, that's the sentiment. You're part of it. All of these people on Twitter, it's like they're brain dead. Brain dead herd followers. That's all they are. Brain dead herd followers. Yes, stocks go up. Yes, stocks go down. They consolidate. Things don't go up in a straight line. And they're not smart enough, in my opinion, a lot of people, to realize that things move in waves, that they don't go straight up. They go up in big, huge up moves. They consolidate lower for a little bit. And they can't figure out that that's a cycle, that you're in a super cycle right now in commodities. People can't figure that out. I don't know why. I honestly don't know why. I'm not any more special than anyone else. I look at these things all the time, yes, and it seems a little bit obvious to me. When I first started looking, there's things that linked up, and then you could see the cycle once you can see it. But if you're a part of this channel and you're watching this all the time, you should know that things cycle up and down. You should know that there are longer dated cycles. There's K waves, Kondratiev waves, there's the real estate cycle, and there's other smaller cycles within it, and there's the presidential cycle. There's all these different cycles. Rock bottom entries, talking about the dollar here. Says the US dollar has failed to reclaim its 14-year uptrend after breaking down. We're standing on the edge of a commodity supercycle. We already started the supercycle in 2020, in my opinion. That was the first leg up. Then we had a second wave back down. Now, I wouldn't say that this is totally broken and we are heading lower yet. This very well could come up and bounce on that support level. So I'm not claiming victory yet. I'm positioned, I'm waiting, and we'll see what happens. But a lot of people, what they do is you'll get like a little breakdown to support, and it may pull a little bit below it. And you can do that. It can still bounce. It doesn't mean that we're going to continue the uptrend. Doesn't mean we started a new downtrend. We have to wait to see. Now, no one will know real time if something has started or ended in terms of this breaking of the trend line. And that's where technical analysis isn't that great. Everyone waits for this break of a trend line. Oh, it broke out. Therefore, this is going to occur. It's not like that, in my opinion. That's a delayed thing. So we're looking at the positioning of money in the markets and how that money is being positioned. But that doesn't mean that there are leading indicators that do exist. Leading indicators can also tell you if you should be positioned a certain way. It's not all technical analysis, in my opinion. You want things to align. You want alignment. It's not one or the other. And that's where I disagree with technical analysis, because they're only looking at how people are positioning. The bigger picture eludes some of them. So be careful with just looking at tech. And I'm not saying this about rock bottom entries or anything like that. I'm just saying in general. Tim Heck says those advocating for a correction in metals, especially gold and silver, are so wrong that it will be painful to watch. We are right in front of a light speed climb, says Tim Hack. And I don't know who Tim Hack is, but I like what he's saying. And the reason I'm sharing that, we are sitting on top of a pattern. So let's go to silver. He's talking about gold and silver. So we're going to go to silver here. Here's silver. We are sitting on top of a lot of resistance. Now, could we go down a little bit? We could. We could go sideways. We could consolidate. No one knows the future. But what would I guess here? I think we're going up just like he said. And when you're sitting on top of patterns, the path of least resistance, if you're sitting on top of resistance, is up. Now, I'm not talking about the resistance that I've got drawn in here. I'm talking about the 35 level that we've gotten resistance at over time. That's the level through here. We have broken above that, and it took a lot of energy to do that. So now we're sitting on top of $35 an ounce. We've consolidated underneath. We've got a little short-term resistance that we're trying to break through. The path is up to me, and we could easily light it up to the upside. So I'm not going to sit around and wait for some pullback. it could light it up. What I'm sitting for and waiting for patiently is the move higher, not lower. And there's a big debate amongst people. They think we're going to get all these big pullbacks. Guys, I think there's going to be a time where this thing rips and it's going to go ludicrous speed. And he says light speed. I totally agree with that. It's going to be a light speed climb. You don't break 15-year in silver, it's 45 years, 15, 20 years in copper. You don't break it and go nowhere. We could go at light speed climb. We may not. No one knows. But when you break patterns, we generally get big breakouts, the patterns of these sizes. It could be a light speed climb. And it's going to be very difficult to get on a climb that's moving at light speed if you're not already on it. URNJ, perfect back test of a breakout level, so he drew it a little bit different than I did. He took the top of the top there, and we're doing a back test for URNJ. Mine looks a little bit different. But again, with where we're at in this cycle, guys, if we're looking at all this copper and silver, uranium's going to go up with it. Crude oil is going to go up with it. It's just a matter of time. So I'm not looking at this like, oh, we're going to get this big pullback. I'm looking like, all right, what's down? What can I accumulate? And I'm going to stick with it, stay in it, ride this dang stuff higher. Saudi Aramco CEO projects global oil demand to rise by 1.2 to 1.3 million barrels per day this year. Demand growth for oil. Eric Nuttall says, with years of demand growth ahead, peak non-OPEC production forecasted in 3 years, and soon normalized OPEC spare capacity, we see meaningful upside in companies with long-dated reserves who continue to compound 10% annual share buybacks, yet who remain deeply out of favor. I agree. But look what's coming. 2025 is a year where we might get a little bit more addition above the growth rate of demand. After that, we're going to start to run deficits and eat through capacity. Looking out in the future, pretty much looks screwed. Now, when is the market going to panic? I don't know. But it's probably pretty soon. And we're going to see commodities across the board launch. And at the same time, we're doing all this money printing. That money printing is going to create demand for oil. If the oil doesn't exist and we eat through spare capacity here over the next few years, things are going to get real interesting. Interest rates are going to go up. Money's going to rotate. We could even see a rotation out of NASDAQ, S&P, and I think precious metals are going to light it up. They're going to light it up. Coming down, are you betting on a weaker US dollar? You might want to think twice. So here's some information against a weakening US dollar. The last time commercial hedgers were this net long, the dollar posted one of its strongest 12-month rallies in history. So could we see a move higher in interest rates and the US dollar? Yes, we could. Now, somebody said, well, we broke a downtrend line. Well, interest rates are going up, and generally the dollar goes up with interest rates. So does oil. Could oil go up with interest rates and the dollar going up? We could. We could. Doesn't mean all these people are right. EEM is pressing against a 15-year base. If it breaks out, it could do what it did in 04 to 07, which was up 375%. Top weights in it: China, India, Taiwan, Korea, Brazil. Reflation favors EM. This isn't a bet, it's a setup. Emerging markets ready to break out, I think, here soon. Probably going to get a big move. That occurred last bull market. All this is all set up. We'll see what happens. Money printing simplified. Too much money printed, prices rise significantly. Everything feels expensive. Longer-term excessive money creation, those same high prices become cheap in hindsight. 3, our brains expect prices to normalize. Reversion to the mean is wired into our biopsychology. Runaway inflation begins when people expect high inflation as a new normal that they will have to live with. When savers decide en masse that it's better to own real things versus foregoing consumption to earn interest, the hoarding genie is released from the bottle. This is what I'm afraid of. Runaway inflation. Why do I think that's coming? Because these setups exist. They're all over the market. These big, the breakdown in the dollar, perhaps, the setup in copper, the setup in gold that's broken out already, the setup in silver, the setup in oil. Runaway inflation is what I'm worried about. Now, I don't know how bad it's going to get. That's what I don't know. Are we going to see like 4, 5, 6, 7% inflation? Or is it going to spark something in the herd? Are we going to see like a big time inflation? Those big patterns, when they break, they generally run big. If we generally run big on a 15 or 20-year chart pattern breakout, how big are we talking and what's the psychology behind it? If people start to panic, I mean, these things could really run, and I mean like really run. So I don't know. It depends on how people react to it. It really does. The UAE energy minister warns that global spare oil capacity is declining annually, and some countries are falling short of their previous production levels. That's also something that worries me. We've got money printing galore at the same time that spare oil capacity is going to start to get eaten up here. This is not a good mix. This is where inflation could get a little bit out of, it could get ridiculous. And I can't tell you exactly when this thing will cross. Um, I think it's coming. I think it's going to happen within 5 years. I don't know the crossing point where people really start to worry from a psychological perspective. The big money is already positioned. We see it in the charts in terms of the copper breakout, gold already broke out. It's all aligned. So now it's just waiting for people to wake up. That's really what comes next. And when they wake up, I don't know if they'll panic. If they panic, well, it's going to get real interesting. It's going to get real interesting. The more neatly you fit into society, the less free you actually are. That's kind of a cool quote. Central banks are buying gold at record levels. They know fiat currencies are doomed. They're quietly preparing for the monetary reset while lying to the public. Yes. Do you know why fiat currencies are doomed? Because of the oil supply and energy supply. Peter Lynch says that studying history and philosophy gives one better preparation for investing because investing is more of an art than science. What are my thoughts, or what are your thoughts? I would say that that's not a true statement. What better prepares people for investing is having a wide base of understanding and having, I would say, an IQ that is above normal. Let's say, 110, 120 is probably preferable or higher. And then having emotional stability and understanding human psychology. I don't think it matters what your background is. I don't think it matters having history or philosophy. And in fact, I would say history is kind of a wasted um, uh, one to get because it's created and made up by man. So they're teaching you an opinion on history, not actual facts. So you have to read a whole bunch of different history books to get closer to the full story. I would say stick to what is true. Mathematics, physics, chemistry. That's what I would rather have a background in. Why? Because it's worth something. Philosophy, it's okay. You can learn how to think. And I think some level of philosophy is good. But I don't think you need to go, 100% full 9 yards on it. So I would say The ones that are the best investors are the ones that have the most training, if they can get it, and they can adapt to the markets, and they know human psychology. And I'm not talking about short-term adaptation. I'm talking longer-term ability to hold, figuring out what matters and what doesn't matter, which takes a little bit of IQ, a little bit of smarts to kind of figure your way through it. Learning from mistakes too. And here's one from Charlie. He says, I think an enormous false precision gets into things when you program computers to make forward projections for a long period of time. The harder you work, the more confidence you get. But you may be working on something that is false. I agree with that. And that boils down to what matters. What matters for potential future returns? Future returns are based off of the under projection of future cash flows, basically. You can't project the future cash flows. So, really, that's where the art comes in. It's not about science. You can't precisely predict anything about the future. So, when you look out in the future, the best investors can see reality, or what they do is they try to pad it with a margin of safety through current valuation. And then if the future is far better than what people project, you got an incredible deal because you bought when the company was undervalued, and then the future projections were also incorrect and the company grew faster than expected. Or the conditions favored the company, which you can't always get the market conditions perfect. So it's about taking bets when there's low risk and then being able to see the future and saying, nah, most everybody's wrong on this. I think we're going to grow faster than XYZ. Freight futures AM update, dry bulk, Capesize down 1%, Panamax is flat, and tankers are both up, VLCC and Suezmax up 2%. Christine says, if you look from December 25 to December 26, we expect non-OPEC production to be flat, BP CEO. So basically, we're going to be flat coming up here for production next year from December to December. The copper news this week is just another perfect example of that the charts often are ahead of the news. News is now that Trump imposes a 50% tariff on copper. Copper had already hit new all-time highs, though, plus recently broken out above and backtested a 3-year purple triangle, and was already breaking higher away from that backtest. The news didn't create this. People were already positioned for it, almost like they knew it was coming to some degree. Or the news comes out and these tariffs come out because the move's already in motion. I don't know which one leads which. I don't know if the tariff news and some of this news is leading, which I don't think it is. I think it's part of the cycle, and the cycle, tariffs are a symptom of the cycle. That's what I think. Giovanni says we're losing world's spare oil capacity year on year. Some nations can't produce what they produced last year and even last month. UAE Energy Minister. Things are going to get tight with time. With time, not immediate, with time. Crude storage, yeah, I think this one's off. I think it was more similar to this one here. We had a build in crude last week. Here's another one from Warren Buffett. Most people get interested when everyone else is. The time to be interested is when no one else is. You can't buy what is popular and do well. Buy when no one is looking. But that's all I've got for today, guys. That's the end of it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials the coupon code. And we'll catch you next time. This is Finding Value.